Fed Chairman Jerome Powell will kick off his semi-annual testimony to lawmakers today, appearing before the Senate Banking Committee. Yahoo Finance Fed correspondent Brian Cheung is here with an inside look at this one. Brian, listen, yields are rising, stocks are coming under pressure. Do you think Powell will say something or even get asked about yield curve control?
Well, it's certainly the case that that's what's on everyone's mind right now, which is that, of course, rising yields on both the nominal and the real side are definitely of concern for people that are watching the market. Is the Fed losing control of borrowing costs on the longer term end of the curve? But I think the Federal Reserve will probably say what it's said all along, which is that yield curve control is something that's on the table, but that they really don't see the need for it right now. Now, of course, it's been quite some time since we've heard the Fed say that, and yields have increasingly gone up since that point in time. But the Federal Reserve has noted that it's going to continue its purchases as needed. So effectively, that could be doing the job already of keeping yields at least depressed in the historical context, which most people, I think, would say is still definitely the case, even if, for example, the 10-year gets pretty close to 2%. Now, of course, the question is going to be broadly, what is the outlook on the economy from the Federal Reserve? And I think that if it were really up to Jay Powell, he would say, why don't you go talk to the former Fed Chair Janet Yellen over on the Treasury side? We can kind of wrap up this hearing right now. But of course, this is one of those semi-annual testimonies that he's compelled to do on Capitol Hill. But on the Fed front, I think largely speaking, there's probably not much news with the Federal Reserve, at least holding pat on near zero rates and committing to its quantitative easing program.
Well, and Brian, I think it's an interesting time for this testimony to come up because these questions tend to be more in the context of that latter concern that you just mentioned. How can we get this recovery going? My constituents are worried about X, Y, and Z. What are you going to do? And you're right. Powell is probably going to say you can go talk to Secretary Yellen for those concerns. But kind of going into the Fed arcana, and there might be a question or two on this. It is interesting that we were talking about yield curve control in the context of would the Fed prevent an inversion? And now it's like, oh, maybe the yield curve is too steep. I mean, how do you think the staff is actually thinking through that issue? Because it's kind of bizarro land to be like, oh, Treasury yield curve says the economy is going too well. Maybe we need to step in here. It's sort of ridiculous to imagine the Fed would feel compelled to act on that basis.
Well, I think when it comes to the messaging on the yield curve, that is a very tricky question. And we've addressed this in many formats on our programming here on Yahoo Finance. What is the reason for why longer term yields are going up? Is it because the Fed's lost control, or is it because of market optimism over the reopening of the economy and the post-pandemic bridge? Now, of course, the Federal Reserve doesn't want to get in the way of mixing up the message if it's the latter point. So I think that's the reason for the conservatism from the Federal Reserve here to say, yeah, we do have the option of using yield curve control, but we want to hold back from using that right now. I mean, you think about what the benefits of using that tool would be. So let's say, for example, the Fed were to put in some sort of mechanism to say, we're going to keep buying 10-year bonds until it's below a certain yield, or that will make sure it never goes above that point in time. Well, then you start to increase the amount of hazard in the economy for where the price signals are coming from in the bond market. Now, the Federal Reserve has already gotten in enough trouble with what it's been doing with the corporate debt market. So if anything, it has very low upside at the risk of maybe decreasing some of the effectiveness of its tools and maybe some of its credibility. So I think that's why the Federal Reserve might say, you know what? Yeah, we always have tools. We always got some tricks up our sleeves, but we're going to be kind of a little bit more hesitant to reinvent the wheel here, at least in this case.
Hey, Brian, I got to give you a shout. I saw a new piece from you just hit the Yahoo Finance site, From Chicken Wings to Steel, How Companies Are Mitigating Inflation. Very interesting stuff. Brian Cheung, enjoy your Super Bowl today. Pre-write those stories. We'll talk to you soon.
Thanks.